Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 6th of May 2020. And yesterday we published a video entitled Gold and Silver Premiums Falling, We Told You So. On Monday, End of Globalisation Effect on Gold and Silver Prices. And on Sunday, the truth about gold supply, demand and prices. Now earlier today, a few hours ago, we published a video entitled Global Recovery May Start in Asia, Not America, where, according to some bankers and economists, the global recovery, when it does occur, will eventually begin and progress from Asia as opposed to the West. This is, of course, a controversial and debatable view and should not necessarily be taken as gospel, but the odds currently appear to suggest that it may be quite accurate. Certainly on the grounds of probability. Now, the time of producing this video is 20:45 GMT plus 1, and we thought we would provide a financial update, as it is midweek and a fair amount of economic data has been announced. US markets are still open but will close very shortly, but here are the current figures. The Dow Jones Index is down 111 points at 23,771. The S&P 500 is up 1 point at 2,869, and the Nasdaq is up 65 points at 8,875. The Euro Stoxx 50 closed down 32 points at 2,843. The FTSE 100 closed up 4 points at 5,853. The DAX index closed down 123 points at 10,606, and the CAC 40 index closed down 49 points at 4,433. So generally, European markets are down. Now, Brent crude is also down $1 at $29.98, and WTI crude is down 33 cents at $24.23. Still both significantly higher than they were a week or so ago. Now, the dollar index is up 0.40 at 100.11, gradually strengthening as the day progresses. So we are still hovering around this 100 mark, where the dollar is uncertain whether to stay marginally below or marginally above. And we still have a view and opinion, depending on some data being announced later this week, that this currency will continue to strengthen in the weeks ahead, despite what some naysayers appear to be predicting. Now, gold is down $18 at $1,689, and in sterling terms it's down just £4 at £1,368, and in euro terms it's down €11 at €1,564. Silver, though, has performed relatively better, and it's down just 2 cents at $14.96. In sterling terms, it's up 8 pence at £12.12, and in euro terms, it's up 0.03 euros at 13.85 euros an ounce. The gold to silver ratio stands just shy of 113 to 1, and it certainly appears recently to be quite comfortable in this 111 to 1 to 113 to 1 bracket, at least for now. Now, the ADP employment report, which declared earlier that 20.2 million private sector jobs were lost in April. Now, the report has split up into how many jobs were lost amongst small employers, that's those with 1 to 49 workers, and it highlights that 6 million jobs were lost. Mid-sized enterprises with 50 to 499 workers, 5.3 million jobs were lost, and large businesses with 500 employees or more axed 8.9 million jobs. And it's interesting to see that small and medium-sized enterprises between them have lost 11.3 million, while the larger businesses have lost 8.9 million. This could have more of a dramatic effect on recovery rates once the current economic malaise is over. And we would argue not to the benefit of the country. In other words, losing so many smaller companies and workers belonging to those companies, they may be, if those companies still exist, less likely to re-employ those workers, whereas the larger companies may have greater capacity to do so. But that really does also depend on the sector in which they are operating. The airline sector, undoubtedly, the very fact that Warren Buffett has recently sold all of his airline stocks suggests that he sees no recovery in the airline industry for many years to come, or no significant recovery to justify holding their shares at least. Now, more than 30 million people have applied for jobless benefits in the past 6 weeks, though not all of them are still unemployed. And another 3 million, it is estimated, have applied in this past week. Now, following the announcement of this report, we actually saw the dollar strengthen, and as a result, gold prices fall. The US 10-year yield moved higher, while the 2-year yield remained flat. Now, from a technical point of view, gold prices, although having fallen, have remained in a sideways trading top situation, which is starting to look slightly on the heavy side. Prices fell through the 20-day moving average, which was former support, and now serves resistance at $1,703. Support is now seen near an upward sloping trend line that stands around the $1,673 mark. Short-term momentum on gold prices has turned negative as the fast stochastic generated a crossover sell signal in the middle of what is seen as the neutral range. Medium-term momentum is negative as the MACD histogram is printing in the red with a downward sloping trajectory, which does actually point from a technical trading point of view to lower prices. Now, we did warn in our Saturday update to at least expect some price consolidation during this week. Now, that said, whilst the ADP figures were poor and had this effect, they were marginally better than expectations, which one would suggest is why the dollar rose slightly. But tomorrow's weekly jobless report and Friday's non-farm payrolls are likely to have greater influence, unless, of course, they merely support what we've seen today. Now, silver prices attempted a rally, but fell back as the 50-day EMA was approached. This continues to highlight traders' concerns about industrial demand for the metal, and quite frankly, we don't blame them. We've been banging on about not forgetting that silver is predominantly an industrial metal, and formerly anywhere between 55 and 60% of its demand was the result of industrial requirements. So naturally, as industry fails to produce and demand generally is down for consumer goods, it's no surprise that this has had a dampening effect on silver prices and is really not an unnatural consequence of the current economic environment. And anyone, frankly, suggesting any differently is attempting to mislead you. Now, the $15 level is significant, as we've mentioned for the past couple of weeks, and we have moderately strong support, though, at the $14.80 level, with additional more solid support at $14.50. And in our assessment, $14 per ounce really does act as a very, very, very solid floor. Now, the trading range of $14.50 to $15.50 we suggested would be what's likely to happen to silver prices during the course of this week, and we have no reason to change that assessment. Now, tomorrow we have initial jobless claims, plus productivity figures for Q1 and unit labour costs for Q1, but the jobless figures are likely to have greater impact. Any additional figures much above 3 million is likely to be detrimental to the dollar, but a report less than this may indeed serve to strengthen it further, and if it does so, could have an additional downward impact on gold prices. Friday, of course, is the big day today with the non-farm payrolls report and accompanying information on wages and the overall unemployment rate. So 2 important days ahead, which could have the power to affect markets accordingly. Of course, if these figures come in at or around expectations, then we should not notice any significant change, as we are witnessing at the close of play today. What do you think? Do share your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos when and as they are published, not forgetting that we update our Richard and Greg channel every few days. And we've placed links to the videos already mentioned and our other channels, both in the description box below and in the comment section underneath the video. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.